Maverick traders. Welcome out to your market roundup for June 21st, 2022. Corey here with you. Quick reminder to make sure you follow your trading plan and let's get to it. So, markets, we talked about this in the weekend trading room. They did a great job of kind of setting expectations for a bounce, and we certainly got that. Couple of percent in the major markets, as you'll see here. The Dow, the S&P, the Nasdaq, the Russell, all up about 2% in percentage terms. You can see the heat map down here, bright green. Advancers versus decliners, about 7 out of 10 stocks advancing. Still in a deep bear market, 85% below the 50-day moving average. But what led to this bounce? Well, in large part, crypto helped out. Crypto is not a major market. You know, it's less than $1 trillion in total market cap and so on, but it's certainly kind of a gauge and a barometer of risk taking. And also, some firms have some major risk to crypto, and it just kind of speaks to potential losses at banks and all these sorts of things that could happen over time. So crypto finally bouncing back and recovering 20,000 was just kind of a good precursor over the weekend. Markets are still nervous. You can see we're still in a downward existing trend. We passed monthly options expiration, and there was an enormous amount of options that were expiring, enormous amount of things that had to be hedged and protected that kind of fueled more of this downside. It was something we call a quadruple witching, which is 4 expirations of major assets, futures, and so forth. And it was a big event, and they fueled more and more selling to the downside. And part of that is forced selling. Part of it is forced selling to hedge things that you're losing on and so on that institutions will do. Not a big surprise to me that we're getting a good bounce back, and there should be a little bit more follow through to this. Still a rough market environment, but we're so far stretched away from those moving averages, some mean reversion is not a surprise. Now, even if we bounce further, you might be surprised at how kind of choppy it is. Like, we could go test the lows here and then see a little bit further advance. It's going to be, still nervous markets. Any of these pops, there'll be a little, there will be some sellers there, some people that want their money back and to take some money off the table and didn't like the pain of the downside. So I don't know that we're going to advance violently, but we'll see. Nasdaq, same thing. I mean, this might be a one-day bounce, and you kind of back and fill, and then you kind of try to rebound a little bit further. But we were at those levels where things were extreme and would kind of reach that important hurdle of crossing that expiration timeline. As you look at the heat map, the one that really stands out on the negative side is Meta, aka Facebook. Energy finally bounced back. Energy, I talked about that I'd actually played it to the downside. And when we talked about it last week, we talked that it had its first drop and then it was kind of bouncing. And I really thought there'd be another drop, kind of an ABC style correction. Well, that came about and energy just kind of collapsed to the downside. Some things just falling out of the sky. And I suspect that that's a really good area to look for some recovery and continuation to the upside. So if you look at them on charts, I mean, it's it's going to be a little choppy, and I don't know that they're going to have the same upside that they had before. I think it's going to be slow and methodical, but I guess it's more neutral to mildly bullish here going forward, but we shall see. For the weekly outlook, we had a +2 for the week, but clearly the longer term charts look quite bad. We're below the 20, below the 50, downward sloping moving averages. Great call in the weekend trading room, though, for this bounce to occur. Now let's look at some names to trade here. Last week, a little lucky, but we highlighted some Chinese internet plays. Those things were up last week in a hellacious market. I think as I looked, everything we highlighted on the bull list was actually up, and then of course everything else was down. The bears and and even the neutral were down. So let's look at a few of these names and ideas here. First, Kellogg on the bull side. Now, really kind of bad price action today, falling off the highs, but I think it's going to keep grinding its way back up a little bit here in the short term. They announced that they're breaking the company into three parts. Historically speaking, spin-offs are bullish and they kind of act like a stock split a little bit, but they're a little bit more bullish than a stock split. So, I didn't want to buy on the gap up, but as it's kind of backing and filling, even if tomorrow, where I'd really like to get it is around 68 and this fully fills the gap, I would try to play this for a bounce. Just understand it's a slow mover. Kellogg is very low beta. It's going to be kind of grinding price action, but look for it to back and fill that gap and then head to the upside. Dell, I think this continues to work higher. I think we'll go up and retest that 52-ish area in the short term. Not too many things bullish and bullish crossovers and higher highs and higher lows, but Dell is one of them. And then JD on the Chinese internet names, like we talked about, continues to really be performing pretty well. Even with some bad news today, you can see how it bounced off of the lows. And I think we're setting up for further upside. Those Chinese stocks are outperforming and have been for some time. Let's look at the bears. So DocuSign, even in a really strong market, this thing finished negative. And there was some news midday. The CEO stepped down. You generally don't do that out of nowhere unless there's more problems and they kind of see the writing on the wall and so on. I'm not so sure the stock is still priced correctly. So it doesn't give me a warm, fuzzy feeling by any means, and I suspect more downside is probable. We highlighted Marriott last week, and it's certainly been very bearish, and even today, continued selling. So my thought here, if you got short last week, is kind of look at this as a little bit of a bounce, and you could probably add to the short and continue to play that to the downside. And then MSTR. Now, this is in the crypto space. It's one that I've traded to the downside a few different times. And this one, if you follow crypto, you know the biggest cheerleader of all is Michael Saylor, who's been buying huge amounts of Bitcoin, and they have huge exposure to that on their balance sheet. Now, if Bitcoin's going to have a big rip your face off rally, this stock's going to go higher. I'm just not so sure that Bitcoin can do that. And, I suspect that up against 200 is kind of your out. Like if you get above 200, you don't want to be bearish on this thing. But I would anticipate that it would kind of fail against 200 even if it were to touch there. That's kind of, you might trade above it for a minute or two, but that would kind of be my entry point. And if it closes above 200 on the day, you could get right back out of it. But I think this thing, inverse kind of cup and handle here, I really think we're probably trading down towards 100 in the coming months. So if you're looking at spreads, the options are extremely expensive. I think a single option, way too expensive, way too much risk and reward. A spread still could be, but a butterfly cuts down your risk because it's a bear spread and a bull spread. And if you kind of price this thing out and target 100, you can put on some interesting trades a few months out that are kind of like 120, 180 type of put butterflies and things like that. Now that's an extreme downside move, another 80 points from here, but it's certainly not out of the question. And some of those come in where, you can pay $2 to have $18 of reward, or you can pay, $3 to have $17 of reward and so on. Now you're not going to land it perfect. It's not going to land right there on expiration. So when we say max reward, it's kind of a little misleading on butterflies because you're never going to thread the needle perfectly where it lands exactly at that price at exactly expiration. but you can make up to that. So putting $2 in to make 5 or 8 or 10, those things happen. And I kind of like those extreme looking butterflies, which is really weird, kind of speculative, big targeted trade down here multiple months out, but they have excellent risk to rewards. The biggest problem with them is getting filled at a reasonable price. You have to use limit orders, and you have to really work your order until you finally get an execution. And it's somewhat hard to do because the bid ask spreads are wide and so forth. So I'm not so sure this one's as tradable as a lot of other things, but kind of an interesting idea anyway to talk about. I would say that for every 10 trades I've put out to try to get a fill, I get filled on one of them. It's bad liquidity, and that's one of the biggest problems. A little bit more room for a bounce. Energy has completed that kind of ABC corrective pattern. Fed Chair Powell testifies both tomorrow and Thursday. Obviously, markets continue to watch what he says and kind of the expectations going forward. And he's going to talk hawkishly because he's got the public up in arms about inflation. So I'm not so sure his commentary is going to be really great for stocks. He's going to say, we're going to do whatever it takes to stop inflation. And that's not going to make the markets super cozy. Carnival, Darden Restaurants, FedEx. We've highlighted FedEx a couple of times on the bull list here in this market roundup over the past couple of weeks. Be aware of that if you happen to have a trade on. So that's our market roundup for today. Thanks everyone for being here. Have a great rest of your week, and we will see you next time. Goodbye, everyone.